All right. That was good. That was a good topic. Like somebody just, you guys talking about your jobs, uh, making money. So today we're going to talk about how to invest that money and where to invest it in, um, and how to gain assets. If you know what assets are, we're going to be talking about those in a little bit. So it's just something that's worth value, basically, is what an asset is. And then how to protect those assets, okay, from you guys getting in trouble, okay? Because you could lose everything in a matter of seconds because something happens. So that's where the good old debate of insurance comes into play. That dreaded word of paying money. Okay, so right now we are on we're going to be going over Unit 3, Lesson 3, and we'll also be going over Unit 4, Lesson 1. Okay? So Unit 3, Lesson 3 will be due on, I believe, Thursday is kind of the pacing. I don't really grade it until the weekend, or Monday is when I put in there. So you might have seen they have us grade and put in all our stuff on Monday. And so that's why you probably see your grade fluctuate on Mondays. So take a look at that. And then a lot of you guys may have been receiving some text messages from me, some emails, just trying to tell you what you need to do to get that grade up, so we can get it to passing. Okay, so that's the goal, to get credit out of this class. All right, so let's roll with it, guys. Let's go over kind of what we do for pacing right now. So I kind of broke this down. Let's see here. What you should complete right now. So this is what you should have already completed, which is in red. Okay, so week 1, you had all quizzes that are 1.0, 1, 2, and 3. Week 2, you should have all ones that start with a 2 and a 3. The quiz is done. Week 3, you should have all of the ones that start with a 4 done. I feel like I'm missing one here. Oh, and 5, because there's 1 5 down there as well in week 3. And then week 4, you should have had all of the quizzes that start with a 6 and 7 done. And this week, you should be working on quizzes that start with an 8 and a 9. Okay, and so that's what we're going over now is Unit 3, Lesson 2, or Unit 3, Lesson 2, Unit 3, Lesson 3, and then Unit 3, Lesson 4 is actually bundled into next week, okay? But we're a little bit ahead because, let's see where we're going real quick. Oh, forgot my things over here. So what's coming up, okay? So week 6, we're already halfway through the block, if you can imagine that. So week 6, this is what's going to be due. Week 7, week 8, and then week 9, I've built in a catch-up week, okay? So anything that you maybe need to redo, make up again, you can always go and do that, okay, on week 9. But why would you want to work there? If you're already keeping pace, you might as well just continue to keep pace, and you won't have to worry about it, and you basically have a week in between our blocks, okay, that you can just like chill back, relax, have a good time with, okay? So that's where we are, where we're going. Okay, so let's talk about types of investments, okay? So an investment is something where you put your money into. So some types of investments are stocks, okay? So stocks are basically, we'll be going over those. Stocks, bonds, mutual funds, real estate, which basically means owning homes, properties, saving certificates of deposit, and collectibles. Okay, so what's a stock? A stock is an investment that represents an ownership in a company or corporation. So the most things like, for example, why don't you guys throw in the chat there real quick, what is your favorite company? Do you guys have a favorite company or product that you like from a company? What is your favorite company or product? Somebody said Disney, Lush. Okay, I don't know what Lush is, Nicole, but I'm sure it's cool. Somebody said Google Pixel phone. Okay, so Disney, you can own a portion of Disney and get its stock. You can own a portion of Google. You can own a portion of, I think DC and Marvel are they owned by Universal? Universal, you can buy stock. You can buy, you probably can buy, if it's big enough, you might be able to buy stock in Lush. So you own a percentage of the company, and the company gives increases in value, and you get some dividends at the end of it, which means some money that it gives you each year. Okay, so you can go and you can invest in those companies, and when you invest in those companies, it gives them more money to be able to grow bigger. Okay, so that's what stocks are. How well the stock market is doing overall. Okay, so the stock market is basically all of these companies that decide to go public, which basically mean to put things in, put their company out for other people to buy them, to buy stocks in them. Okay, and so you may have heard something called the Dow. That's called the Dow Jones Industrial Average. So it takes the 30 leading industries, and it kind of compares to see how the stock market is doing. So if the stock market is going good, you're going to see an uptrend, and you know that the economy is doing good. Okay, if it's going bad, then it'll be going down. So you have the Nasdaq, the S&P 500. These are probably some of the things you've seen. Okay, so when you're looking at that. Okay, moving on. We got a lot to cover today, so sorry guys. Okay, so a couple other things, ups and downs. Okay, so the term bull market means that the market is doing well because investors are optimistic in the economy and are purchasing stocks. So the more people that want to get into the market, you'll call it a bull market, and so it's going up. The term bear market means the market is doing poorly and investors are not purchasing stocks, and they're selling stocks they already own. Okay, so purchasing stocks. So has anybody purchased any stocks before? Yeah, it's something not people sometimes getting to, usually when they get older and trying to look for retirement, they do that. So those are, send me some private messages. I'll try to get to those when I can. Okay, so brokers. Okay, a broker is somebody that is licensed to buy and sell stocks and provide investment advice to you on those purchases. Okay, so they usually purchase the stocks organized by the stock exchange market. Over 3/4 of all stocks are bought and sold by organized exchanges. Okay, there's somewhere you can go out and get apps today. I actually use an app called Robinhood that goes and watches some stocks for me, and when I want to purchase some stocks, it will, or they get to a certain point, then I'll know that I kind of want to buy. So, and it just kind of depends on what you like, what you want to buy. Okay, organized exchanges. So there's a minimum requirement of stocks to ensure a reputable company are used. Each exchange has a limited number of seats available, which are brokerages firms purchase to give them legal rights to buy and sell stocks on the exchange. Okay, so if you're wanting to buy through a broker, they have to be part of a certain group per se to do that. Okay, so a couple things about the New York Stock Exchange. So it's the oldest and largest, began in 1792, which is a long time ago. You can probably see some of these. 1,366 seats available. There's 2,800 companies. The average stock price is $33, and there's a strict requirement to be part of that. And then you have some of the other ones like the the American Stock Exchange. It's the second largest. Average stock price is 24. So a lot of these videos, I'm kind of going faster a little bit because we got like 59 slides we got to get through. So a lot of these videos will go over it a little bit more. So I'm just going to kind of run through it so you get an overview of everything that we need, okay? All right, the regional stock exchange. Investors living in a certain area, which include Boston, Cincinnati, Philadelphia, and Spokane. Okay. You have the National Associations of Security Dealers. Their average stock price is $11. Over 4,000 small companies are part of that. Okay, so the next thing you have that we've talked about, so we talked about stocks, now we're going to talk about bonds. Okay, bonds is a security representing of a loan, money from lenders to a borrower for a set period of time, which pays a fixed rate of interest. So for example, the United States sends out bonds so that they can get money, and they pay interest on that bond for a set period of time, okay? And they know exactly what they're going to get when they buy the bonds. So usually this is done by countries. Countries set bonds, and so that they can get money back. So it's basically like you're lending money to the government, so they will pay you some money back in interest, so they can fund their government. Okay, I guess the one thing that would be scary is if like the country went bankrupt, like Greece or some of these other countries in Europe that have been going bankrupt. Okay, the other thing that we have is called mutual funds. Mutual funds is an investment that pulls money from several investors to buy a particular type of investment, such as a stock. So mutual funds are really good. They're a little bit safer than just buying stocks outright by yourself. And usually you're going to put your money in a mutual fund where you want a little bit safer and not as much risk. So it's all about risk and reward, okay? Real estate, it's an investor buys a piece of property such as land or building in hopes to generate a profit. For example, buying a home, you're hoping that your home value will increase. And so that would be almost an investment to buy a home, right? People buy rentals as well. They have business properties, land, hoping to sit on the land and hoping it increases, and you can make a profit on that, okay? So that's another something that you can put your money into. Okay, another thing that's really, really safe is savings certificates of deposits. It's a deposit that earns a fixed interest rate for a specified period of time. The longer the time, the greater the return. There's a substantial penalty if you withdraw it. Okay, so for example, your banks or credit unions that you're with, you can go put your money in a certified deposit, and it says you have to keep that money in there for X amount of years or X amount of months, or you have to pay a penalty back, but they'll give you so much interest back. It's not a lot of interest, so it's not very risky though. Okay, another thing that you can buy is collectibles, and think of them as going them up. So they're rare or highly valued things. So think about artwork. So artwork can be known as an investment. Baseball trading cards or basketball cards. So if you had like Michael Jordan's rookie card is worth a lot of money. Those kind of things, those collectibles. Coins, so old coins are collectibles. Automobiles, so I would love to get an old automobile and keep it. Antiques, some antiques are valued high, and they're an investment over time, okay? So, I'm sorry guys, hold on real quick. Sorry, my daughter just walked in, so oh, here she is again. Sorry. Alright, apologize about the interruption. Kids, you know, they get home from school and want to go play. So, you guys are almost off. I'll try to hurry and get done. How's that? Okay, so risk and return, okay? Average stocks have high rates of return. They increase or decrease in the original purchase price of the investment. The higher rate of return equals more risk. So the more risk you're willing to put in, the greater return you might be able to get. So I think I talked to you guys about cryptocurrency not too long ago. So cryptocurrency has a very high amount of risk, and I told you I might be investing in some cryptocurrency, but there's actually a high rate of return. Yep. So Andy says Bitcoin, so Bitcoin is one of them. That would be some cryptocurrency there that you could invest into. Okay. But you could lose all your money in it too. Okay, so that's what it is. Like somebody says, the stock market and investing and stuff is kind of like gambling. Yes, there is some risk to it. Okay, but everybody kind of does it for retirement, for things like that, and you can put your money in safe places if you'd like, or you can risk it a little bit more. Okay, everybody says to diversify your portfolio, which just basically puts, don't put all your eggs in one basket. You're okay. Zoe thinks though. Okay, so here's kind of a pyramid of from low risk to high risk. Okay, as we're talking about things. So we have at the very bottom we have insured savings. So you're never gonna lose it, but you won't really get a return. U.S. savings bonds is good. Security deposits, treasury issued things. Then you have money markets or mutual funds, high grade mutual funds, convertible bonds, blue chip common stocks. Real estate's kind of a little bit of risk here. Okay, growth of mutual funds, collectibles. So your antiques, classic cars, you know, you never know. Spectacle stocks and mutual funds. And then commodities and penny stocks. So penny stocks and commodities. So commodities is like purchasing, like helping purchase wheat and beans and stuff like that. And hopefully those are going to rise and the farmer will do good. But it doesn't always mean that way. So you may not get a cut of his profit. So, and then you also have things like cryptocurrency and just buying penny stocks, which is basically what I do on my little app, you know, that I was talking about, the Robinhood app that I own. Okay, so short-term investment strategies mean buying on margin is where investors borrow a part of money needing to be invested in a stock from a brokerage firm. So for example, I think Bitcoin, if you were to buy one Bitcoin, it is like $6,000. Which is really expensive. So if you went in with a couple different people, you could buy part of that, and you could all take a percentage of your earnings if you have that. Okay. Short-term investments. So short selling is where an investor shares stocks that do not own the input to buy them back later at a lower price. So people go and they buy stocks for a little bit, wait for it to go up, sell it, buy some other low stocks, and wait for it to go up, and then sell it. Got some more kids going on here. I'm sorry, guys. Hold on. All right. You may have heard the yelling in the background. I tried to mute it, so disaster averted. Sorry. All right. So short selling, so you go and buy them and then sell them at a cheaper price. So this would be an example of what they call rollerblading. So your friend buys new rollerblades for $80. You borrow them and sell them for $80. The price of the store has lowered to $45. You buy a new pair for $45 and give them to your friend. You made $35. Okay. You see how that kind of works? So overall, you're the one that's making money. Your friend gets a new one, so he's excited about that, but you have $35 in your pocket to show for it. Okay. So sell high, buy low is kind of what you want to do. Diversifying, okay, it basically means spreading everything out. So you don't want to put all of your stock that you're buying in Disney, right? What if Disney were to go under? I'm not saying they are, but I'm just saying it could happen, right? So you want to invest in a whole bunch of different things, not just in the stock market or in different companies, but you might want to invest in real estate or some penny stocks or different types of things. Okay, dollars cost averaging is buying an equal amount of the same stock at equal intervals. Okay, invest $100 in eBay every month. The price you pay for the stock averages out over time. Okay, so this would be kind of your average over time. Okay, so you invest, instead of investing like $1,000, $20 a share, you have 50 shares. You just do this over time and you can continue to build it up. Okay, so looking at setting aside so much money each month, they say about 10% of what you make is what you should be investing, okay, into there. Okay, so there's different kind of techniques, buy and hold technique. They'll probably tell you this on the video. Sorry, I'm kind of going a little fast here. The regulatory pyramid. So you have the U.S. Congress, the SEC, also organizations and individual brokerage firms that all are watching and protecting your money, because we're going to be talking here pretty soon about fraud and people getting people's money, and they just use it for themselves. They actually would get somebody's money and give it to somebody else and saying they're making so much of a return, so they would invest more money, and then pretty soon all the money would run out and they'd get in big trouble and go to jail. They call it a Ponzi scheme, if you've ever heard of that before. So we'll be talking about Ponzi schemes in different ways that con artists have conned different people. All right, we're gonna skip that. So they do annual reports, companies do, so you know how much they will invest or how much money they're making each quarter, each year, and so you can see a trend if you want to purchase into a company or not. You can look into different things like the Wall Street Journal, Fortune, Kiplinger's Personal Finance to basically see what trends are happening in the market and what you might want to invest into. So, for example, Amazon, right? So if you were to buy Amazon a long time ago, you probably made a lot of money off your stocks and your initial investment. Okay, so you want to see what everything's trending towards. Okay, so do you want to buy or sell? So you have different options: online brokerages, discount brokerages, investment advisors. Okay, so you have all these things now, right? You have cars, you have a home, you have stocks. You're getting a lot of what's called assets, but you need to protect those. Okay, so the way you protect those, so let's look at these couple things. Okay, the number of insurance claims for automobile accident involving teens is blank % higher than those of adults. Okay, teen crashes drop by blank % 6 months after getting their license. So what do you think? 70? Okay. Any other thoughts? Okay, somebody say 70. I think that's pretty close. I don't even know if it gives me the answer. Here's some other ones, but it's really, really high. So basically, the more experience you get for driving and everything, the more you're able to, the more rates will go down for it. Because I don't know if any of you guys have got your license yet. and put yourself on insurance, it's super, super expensive at first, and then it will go down over time. Okay. 16-year-old drivers have blank times risk of being in a crash than those compared to 18. Okay. So somebody said, I've had mine for a year now. Do you know if your rate has gone down on your insurance yet? Alright, hold on. I got a kid here that wants me to put on a show for him. There you go, dude. Go upstairs. Alright. Yeah, it's still expensive. So about 18 is when it starts going down. And it's really, really high, okay, for those that do it, okay? So, for example, could you afford to pay for the damage? So if you, even though the insurance rate's so high, could you afford to pay for the damage? Has anybody gotten a wreck yet? Those that have their license. Have any of you guys been in a wreck yet? No? No and yes? So maybe it wasn't your fault? No? I got in a wreck when I was 17 years old. I had a Jeep. I backed my Jeep into my friend's vehicle. That's good. I'm glad. I'm hoping you guys never do. But here's an example, right? So when I was 17, I backed my Jeep into my friend, and it did a whole bunch of damage to his vehicle, right? My cousin ran through someone's fence. He had to probably replace the fence, right? So if I didn't have insurance, I would have had to pay, I think it was like $2,500 or $3,000 to fix his vehicle. Well, I'm not even sure I had that much money in my bank account. So there's no way I could have paid for it. And then he's out money, right? He's out his car. So that's why it's important. If there's injuries involved in the accident, oh, somebody hit your car the other day and didn't tell you. Oh, that's horrible. Yeah, that's sad. But like, they may have not had insurance, right? And so, especially because of injury, it's gonna be bad, right? It can get up into the millions and millions of dollars. And then if, for example, there was a fatal accidents that were here on I-15 up by me not too long ago, you know, if it was your fault in the accident and you cause a death, I mean, how much does that cost, right? Put a number on a life, okay? So you want to have insurance to help pay those medical bills, to pay for property damage, to pay for all those things, okay? Because it could financially break you, and that's why you carry insurance. So in exchange for a small payment, what happens is you're protected against chances of big financial setback or huge loss, okay? And that's basically what insurance is. So it means you have various ways to deal with potential personal or financial losses. And it's protection for a large-scale financial loss. So that's why we have insurance. Okay, the payment you make to the insurance company is in exchange for a promise of protection or help. It can be monthly, quarter, semi-annually, or annually that you can pay those premiums. Okay. So the amount of loss you must pay out of your pocket before insurance company begins repaying is called what's called a deductible. Okay, it ranges anywhere from $100 to $1,000+. So you want, the higher your deductible, the more risk you're taking, and the more you're able to, the cheaper your premium or how much your insurance will cost, okay? So if you have that money to do it, then you can run a higher deductible. So there's a lot of different types of insurance. You have automobile insurance, which we talked about as you're on the road. You have health insurance, so if you get sick, get put in the hospital, to supplement the cost of that. You have life insurance, so if you were to pass away, you know, your beneficiaries, like, you know, pay for funeral expenses. pay for supplement income, homeowners or renters insurance. So if your house were to burn down or somebody were to steal your items that you have. Also, you have disability insurance. So if you were to occur some kind of disability, they would actually pay out money to you each month so you could continue living the lifestyle that you have. So all of this isn't required, but for automobiles it is required that you have liability coverage. So that basically means like if you were to cause damage to some other vehicle. It also has medical payments. So if you were to injure somebody, medical payments go towards helping pay for those injuries that you may have caused. You have what's called uninsured motorist. So if somebody, uninsured and underinsured, so if somebody doesn't have enough insurance to cover all your costs, or if they don't have insurance at all, your policy will help cover that. And then also you have collision insurance, which means if you hit something else, it will fix your vehicle or your asset that you have. Okay, so an automobile policy, there's many things that affect the cost, and I hear everybody complain about the cost, which is true, right? Age, the younger you are, right, the less driving experience you have, or the older you are. Old people, they're pretty bad on the road. Don't know if your grandma or grandpa still drives, but my grandma's horrible, okay? I wouldn't ride in the car with her, okay? Gender, actually, so boys, your rates are going to be higher when you're younger than females are. Females actually get in more accidents, males get in larger accidents. Marital status, if you're married, you'll actually get a better rate. Girls are better drivers, Zoe says. Sometimes. Not always, but yeah, sometimes. The type of car you drive. So if you have a really high performance car, expensive car, it's going to be more expensive. The cost of repairs, so the area you live in. Mileage, so how far you drive. Location of where you're at. If you're out in rural Utah, you're going to be paying a less price than somebody that lives in Salt Lake area. Law enforcement, so if you get tickets on your license, that will do that. And then your driving record, okay? So if you've had accidents before or been in multiple accidents, your rates are going to be higher, okay? Okay, here's another one, health insurance. Health insurance is to pay medical bills in case you or your family members become sick or injured, okay? This is really important because health insurance can get very, very expensive, okay? So most, I think it's actually all the way till you're 26 now with the new Affordable Care Act that you can stay on your parents' policy if they have one. All the way up to 26. So that's kind of a little outdated there. Okay, the next one's property insurance. So property insurance is protect your material possessions from like fire, flood, theft, those kind of things, okay? So you're really looking at like what's called homeowners insurance and renter's insurance, okay? So renter's insurance basically means it's going to cover just your personal property. So you're like if you have a laptop or clothing or that kind of stuff and it were to get stolen or a flood came in and ruined it or fire, they'll cover those kind of things. And renters policies are actually really, really cheap. So life insurance. So if somebody depends on you for like income, you probably want to get some life insurance. So it protects those if you were to have like a death, okay, an untimely death. There's two types of insurance that you need to know about right now. One's term and one's whole life, or variable life, which can be an investment, but I won't go into all those details. Okay, so future insurance needs. So this is something you want to think about when you're thinking about the cost of living outside. Health insurance, how much does that cost? It's expensive, okay? There's a time when I had to pay, it was like when work wasn't supplementing my income at like $700 a month just for health insurance, okay? So that is expensive, okay? Property insurance, okay? If you have a mortgage on your house, that means the bank owns it and you're trying to pay it off. They're going to require you to have property insurance. So they can run anywhere from $300 a year up to, you know, $1,200 a year. Life insurance is usually a cost per month. They can be fairly cheap when you're younger, but when you get older, they can get more expensive. So, you know, $10 to $50 a month, okay, if you have other health risk. Disability insurance, hopefully some employers pay for this. So if you go to a place that does that, but I'm not exactly sure how much that is. And then liability insurance, so like car insurance, you're probably anywhere from $50 to $150 a month, depending on how many vehicles you have, what type of car, and your driving record. Okay, so a lot of variables to kind of look into to kind of see what you need. So when you're looking at this and you're looking at planning for all your assets, it's called planning your estate. Okay, your goal is to minimize taxes and be able to distribute it to those that you care about. Okay, so you want to do a couple things. Usually you can have an attorney for, I did my living trust and will not too long ago, and basically it just kind of says a will is, well, actually it goes over these real quick. A will is a legal document that tells where you want things to go to, you know, so if you want it to go to you know, after you die, like your parents, or, you know, if you have kids someday, that kind of thing, where all of it goes to and how much to each person. You also may want to look at getting a power of attorney. So if you were to become incapacitated, like, who's going to make your decisions for you? Who's going to say, hey, we're going to pull the plug, right? So you want to have a person have legal authority over that. And then a trust is a legal document which an individual gives someone else control of their property for ultimate distribution to another person. So for example, I put my home in a trust, I put some of my businesses in a trust, all those kind of things, and it helps kind of protect you that way, and then that's distributed throughout those that you want to give your things to, okay? So that is it, okay, guys? Sorry there's a lot to go over. Sorry my kids interrupted. And they're down here again, of course. So I will leave it for questions. I'll stop recording. If you have any questions of what you need to go over, I'm going to open up the slides here if you want to go back to the front and see what exactly is due. And thanks, everybody. Appreciate it. We'll see you.